Hi there. This lesson will cover the third intraday gap setup. Now make sure you've seen the previous two lessons before watching this one. This setup does not happen very often. In fact, it happens quite occasionally, but works very well. This type of gap setup usually changes the existing trend. So what usually happens is that the markets are in a trend, then a gap will threaten a complete trend change. This gap is higher than what we expect a rally to be. It's likely the trend is about to change upwards now. Very simply put, if we are in a downtrend, we need a gap up like this one to signal a trend change towards the up. The gap needs to be significant. We can't have a small gap up. It has to be a large gap up. Usually, it's close to or above the previous swing high, and the opening bar must be green. This means that the market is interested to go up. We buy the high of this bar and the stop loss is at the low of the bar. Very simple. The same is true for a sideways market. Over here, the market's not really going anywhere. You have lower swing highs, higher swing lows. It's all over the place. The market is sideways. In this case, we had a gap up and the opening bar was green. Now that is enough for us to place a buy order at the high of this bar and a stop loss at the low. Simple. Let's see a few examples so you can understand this better. Now for this setup, I will not look at hourly charts. Let's shift one gear lower. Let's move to the 30-minute charts. This is Nifty 30 minutes. The markets are clearly falling. That is our first swing high. Then we got a lower one. The markets fall even lower, creating two more lower swing highs. We know only two things that can happen. The downtrend can continue and the markets keep falling. Or the markets can take a U-turn and break the swing high, in which case the trend has changed. But guess what? The market, instead, gaps up right here. That is the trend change signal. This gap up bar signals the possibility of the downtrend reversing to an uptrend. And just like all gap trades, we want this to be green. That's the direction of the purchase, which is a buy. And we buy the high of the bar and the stop loss is at the low of the bar. Okay, let's see another example, but let's make it a little bit difficult this time. Let's see a sideways trend. Remember, all we're looking for is a gap that threatens the existing trend. This example is actually only a few days after the trade we just showed you. Nifty, in fact, went into a sideways trend. We have seen three swing highs here that are descending and two swing lows which are rising. So you don't have an uptrend or a downtrend. It's very clearly sideways. Now the market is in a doldrums period. Then we gapped up straight above the recent swing high. That's enough to say that the trend is now moving upwards. We buy the opening bar's high, it's also a green bar, and the stop loss is at the low. That's it. Our trade worked out pretty well in this example. Let's see another one. Here too, Nifty is in a sideways trend. You can see that swing highs and lows point at no particular direction. To break this sideways market, we had a gap up green bar. This gap is quite clearly shows us that the existing trend is changing to the up. We simply buy the opening bar high and the stop loss at the low of the bar. Let's see one final example. Over here, Nifty was in a fantastic downtrend and then we did something magical. We got a gap up and the opening bar was green. Now you can see here, we've clearly jumped over the latest swing highs, the last two swing highs rather. This means that the trend is very clearly changing up. And we also have the opening bar green. That's all we need to place our buy order at the high of this bar. It got triggered and we had a massive rally on an intraday basis. Now that's the setup. Very simply, we had three setups we learned in an uptrend. We learned one in a downtrend. And this one which can be used in sideways trends. If you have any questions, we'll be more than happy to answer them in the discussions area below. I'll see you again in another course. Thank you.